It is 5 p.m. East African time and on Metropole TV that attributes to markets today. My name is Nina Shaban. Welcome to Markets Today. And we start off by looking at the stories that are making headlines in the world of stocks and business. A report by Reuters indicates that the Kenyan shilling strengthened against the dollar on Tuesday, helped by inflows from investors buying treasury bills and bonds. Traders said commercial banks quoted the shilling at 100.70 buying and 100.90 selling per dollar, compared to 100.90 buying and 101 selling at Monday's close. Here now are the day's indicators of exchange rates. All right, now moving on, China said on Tuesday its top trade negotiator will visit the United States for talks with American counterparts this week, even as Washington stepped up pressure with plans to hike tariffs and complaints that Beijing was backtracking on its commitments. The Commerce Ministry confirmed in a brief statement that Vice Premier Liu He and President Xi Jinping's trade appointment would visit the U.S. on Thursday and Friday. Now, the trip is taking place a day later than expected after President Donald Trump jolted global markets by announcing the tariffs on $200 billion in Chinese merchandise will more than double the 25% on Friday. Chinese Foreign Ministry spokesman Geng Shuang said at the regular press briefing that China always believes that mutual respect, equality and mutual benefit are the premise and the basis for reaching an agreement, adding tariffs will not solve any problem. Confirmation of Liu's travel plans lifted Asian stock markets as his presence could raise hopes that a deal is still possible. The tariffs announcement tanked stock markets worldwide on Monday and worried U.S. farmers and businesses who have been banking on resolution to the year-long conflict that has engulfed $360 billion on two-way trade. U.S. officials had said the world's two largest economies were close to an agreement, but Beijing reversed course in recent days. U.S. manufacturers and farmers were becoming more optimistic amid signs of progress and comments from officials that the talks were entering their final phase, reinforced by reports Beijing was sending 100 officials to this week's negotiations. Hand in hand with that, the head of the International Monetary Fund, Christine Lagarde, said on Tuesday that fresh trade tensions between the United States and China were the main threat to the world economy. She also told journalists at a conference in Paris that recent rumors that tweets made an agreement between the countries less likely. President Donald Trump jolted global markets on Monday by threatening on Twitter that tariffs already imposed on the $200 billion in Chinese exports to U.S. would more than double to 25% on Friday from the current level of 10%. Also speaking at the Paris Forum event, French Economy Minister Bruno Le Maire warned about the impact of the trade war between the world's two biggest economies. He called on the two sides to avoid decisions that would threaten and jeopardize world growth in the coming months. China said on Tuesday its top trade negotiator will visit the United States for the talks with his American counterparts this week, and the countries have been locked in talks to resolve tensions that have seen both of them impose tariffs on goods worth $360 billion. Treasury Secretary Steven Mnuchin has described the negotiations as 90% complete, but told reporters that in recent days, the talks went substantially backward, which he blamed on China on previous commitments. President Donald Trump jolted global stock markets on Monday by threatening to hike tariffs on $200 billion of Chinese goods amid apparent setbacks in trade talks between the economic superpowers. Equities in Asia, Europe, and the U.S. were a sea of red as Trump's remarks rekindled fears of a trade war with potentially devastating consequences for world growth. Many markets, however, paired early step losses as analysts suggested that Trump was playing a game of brinkmanship and would ultimately save ongoing trade talks. But U.S. officials late on Monday said Beijing was reneging on commitments made in the talks and confirmed the tariffs would more than double to 25% on Friday. The Dow Jones Industrial Average shed to 0.3%, closing at 26,438.48, recovering from a drop of nearly 1.8% earlier in the session. But after U.S. markets closed, U.S. Trade Representative Robert Lighthizer said that had been an erosion of commitments by China. According to reports, and Treasury Secretary Steven Mnuchin said the negotiations were 90% complete, but in recent days, the talks were substantially backward. Eurozone stock markets, if we could quickly just take a look at that. Now, the Eurozone stock markets extended losses on Tuesday, and Asia traded mixed as investors await the latest twists and turns over the U.S.-China trade talks. London stock markets lead 1% with the benchmark of 100 index catching up after a long holiday weekend in Britain. Tokyo slumped 1.5% as dealers there returned after the being off for 6 working days, while Seoul dropped 0.9% following a long weekend. Indices has slumped on Monday with Shanghai suffering its heaviest loss in 3 years after the U.S. President Donald Trump threatened to hike tariffs on $200 billion of Chinese goods amid apparent setbacks in trade talks between the economic superpowers. Trump's remarks shocked markets, coming just days after officials on both sides had sounded positive on the talks, with markets broadly expecting an agreement to be announced soon. Lastly, Hong Kong and Shanghai stocks clawed back for some of the previous days' hefty losses to the end of higher Tuesdays as investors cheered China's confirmation that its top negotiator will attend this week's U.S. trade talks despite Donald Trump's tariff threat. Now, the Hang Seng Index rose 0.52% or 153.20 points to 29,363.02 points. Now, Shanghai's main stock index recovered slightly on Tuesday after closing down 5.6% the previous year's session. Now, the benchmark Shanghai Composite Index gained 0.69% or 19.93 points to 2,926.39, and the Shenzhen Composite Index, which tracks stocks on China's second exchange, added 1.62% or 24.51 points to 1,540.31. On currency markets, the yuan stabilized after being hammered on Monday, through most other higher-yielding riskier units managed to claw back some of their losses. All right, that's all we prepared for you from the news desk when it comes to Martins Markets. Let's take a very quick break and we shall be coming back with more. Welcome back to Markets Today. Let's take a look at the numbers at the closing bell, and we start off with the indices. Now, starting off with the NSE 20 share index that saw a downgrade of 0.58%, standing at 2,783.01 points, and the NSE 25 share index that also saw a decrease of 1.32%, resting at 3,886.48 points. And finally, lastly, the NSE All Share Index that downgraded by 1.50%, landing at 157.79 points at the end of yesterday's closing bell at the NSE. Moving on to our top gainers at the closing bell today. We start off with Total Kenya Limited that saw a pump up of 4.44% with a current market price of 28.2 shillings as opposed to yesterday's 27 shillings. Khan General Limited that saw a pump up of 1.98%, resting at 23.2 shillings per share. British American Tobacco Kenya Limited a saw pump up of 1.78%. Home Africa Limited saw an upwards move of 1.75%. And East African Cables Limited movement to the upside of 1.56%. Now let's take a look at the losers. Our top losers. As you can see on screen, our top loser who dropped down by 10% was Unga Group Limited, followed by Kenya Airways, who had a dump down by of 6.39%. Stanley Fahari Income saw a movement to the downside of 5.44%. Umema Limited also saw a drop down of 3.56%. The National Bank of Kenya Limited witnessed a downwards move of 3.53%. All right, with that, let's take a look at the daily commodities and we shall be back with more. All right, and with me in studio is Mugendi, who is an analyst from Cytonn Investments, who's going to help us break down the different movements that we've seen taking place at the NSE, and also talk about the stories that are making headlines in the world of markets and business at large. A very good evening to you.
Thank you.
With the different movements that you've taken a look at, we're starting off with the gainers, the top gainer being Total Kenya Limited, seeing a pump up of 4.44%, and the lowest gainer is African Cables, seeing a pump up of 1.56%. What do you read from that? What would you have to say about that?
Well, for Total, I think the main story that is driving it could be the increase in oil prices globally. As we've seen, Brent and oil prices, international oil prices have actually risen close to 30% since the start of the year. So that is also sifting into the expectation of higher revenues for the company going forward. So I think that with the higher oil prices, more even Total can all should do better in terms of revenue generation. All
right, and looking at the losers, we have Unga Group Limited, that is the top loser, seeing a downgrade of 10%. Your sentiments on that?
I don't have any sentiments.
You don't have any sentiments on Unga Group. What about the National Bank of Kenya Limited?
However, National Bank has been in the news a lot lately, especially because of the proposed takeover by KCB Group. So investors have actually been reacting towards that news with the expectation of whether it's a good buy for KCB. Market perception was actually that it was a good deal for NBK, but they came out with cautionary statement that the board is actually analyzing the deal in detail. So we expect something out from the board of National Bank once they've analyzed the deal, and possibly on a way forward on that. However, the market has also been a bit depressed following the closure of dividend season. As most counters, especially banking stocks, they closed their books for dividend in the previous month. So a lot of counters have actually eased off those highs.
All right, and we'll be delving deeper into National Bank and its new merger from KCB, the acquisition from KCB actually. But before we get there, let's take a look at who made the most trades, who's trading most, and we're talking about the movers and the shakers. So we have Equity Group Holdings that traded 6,326,900 shares. Safaricom Limited, 4,354,900 shares. We have Kenya Commercial Bank, KCB, 2,186,600 shares. Kenya Electricity Generating Company Limited, 1,352,100 shares. Cooperative Bank of Kenya, 1,319,500 shares. It's impressive how KCB is a top mover and NBK is on the losing end. What do you read from the movers?
From the movers, the top three, there's not much change, as we saw, is KCB, Equity, and Safaricom. The most liquid stocks that we have. Kengen is one that hasn't been in the news a lot. Quite interesting what has happened there. And then Cooperative Bank also went ex-dividends sometime last week or so. It has been trading at quite low prices. I think local investors have come in to support the share price.
What would have caused the Kengen into the movers and shakers group?
Well, it could be some policy shift, or investors are trying to read something into the expectation of the results. However, apart from that, until we know who exactly is doing the moving, we're not quite sure who's been buying.
All right. Now, thank you very much. That's it for taking a look at what has been going on at the NSE. We want to now get down to what is affecting not only the NSE, the trading, but the economy at large. And we start off by going back to the acquisition by KCB to NBK. Now, the process of acquisition has begun, where KCB is set to own the National Bank of Kenya 100%. What is set? What should we expect from this?
Well, basically, as we said, NBK, they'll have to review the offer in detail, present it also to their shareholders and see what comes out of that. If it's a good offer, I think they should be willing to take it up. For KCB, again, they also have to present it to their shareholders to see whether it can be agreed and move forward. But for KCB and NBK, one of the major drivers of this acquisition is they do have common shareholders, that is being the Treasury and NSSF, being major shareholder actually in National Bank. So actually the integration and bringing this proposal forward is not such a huge step for it's not a huge sell won't be a huge sell for them. So I think it can actually pass through the various processes quite smoothly. So we'll see. KCB has been on an acquisition spree. We've seen they've also tried to, they've had dealings with Imperial Bank, and we're also seeing in terms of geographical, they're trying to enhance their presence geographically, possibly with some more acquisitions in Zaire and possibly Rwanda. And
they're moving fast.
Yes,
they're moving really fast. And are there any risks that they should be worried about?
Well, in all transactions there are risks, especially post-transaction. You have to merge the two entities, clients-wise, also in terms of staff and culture-wise, and how just to go around operating the new entity. However, we've long been had the notion of more consolidation will actually increase in the banking sector, in Kenya's banking sector, and we've seen this actually come to pass with NIC, CBA being the major one. I think there's also sparring some more acquisitions in the space. So we think that moving forward, this will also not only be the last. We think more. Also seen Equity Bank has come into its space with proposed acquisition of Atlas Mara's regional subsidiaries. So the competition is heating up. That's what I'll say. And more banks are looking for that growth factor.
All right. Now enough about the financial institutions. I'd like us to shift gears to the manufacturing industry, where Kenyan factories are not hiring due to the uncertainty of the regulatory and trade environment. That is a research that was just done. Now, 800,000 jobs were expected to support the Big Four agenda. And with that said, it's unfortunate that 3/4 of manufacturers say they're not going to hire for the next 6 months. And the companies that are actually planning to hire are only planning to hire about 63%, and they're only hiring semi and non-skilled personnel. So kindly give your reading on what the numbers say about the manufacturing industry in Kenya.
Well, I'll say the first start of the year was a bit better in terms of coming into this year. We expected a lot of rebound. We saw business optimism picking up. However, when it came to the last month, that was April, we actually saw the business optimism contract. We follow the Stanbic Purchasing Managers Index, which came in below 50 for the first time this year. So actually meaning that businesses are expecting the opportunities to contract going forward. So I think this plays in also into what we've been seeing. As we know, the long rains were delayed, or at least they didn't come as expected, and a lot of manufacturing jobs actually play through the agriculture, agro-processing linkages that we see. So because of this macroeconomic conditions haven't been as favorable as they were possibly if you see last year. We also know that last year we had a strong GDP growth, but we expect that to slow down a bit this year also because of the slowdown in the agricultural sector. So looking forward, I think companies have tried, especially in the formal sector. If you saw, the banking sector has been laying off, financial services have been laying off staff. That was owing to the interest rate cap, and there's not a lot of credit that's flowing in the economy. So I think that's also playing into is hurting growth prospects going forward. So in terms of hiring more skilled labor, we've seen those numbers actually shrink a lot. More even companies are giving exit packages.
Okay. Though what I'd like to ask Caleb is, how exactly can we fix the manufacturing sector, considering this is the one sector that is supposed to be creating jobs?
It's not a straightforward way, I would say, because feeding into the manufacturing sector, we also have to look at our imports. What are we importing that we can produce locally and manufacture locally? Also, setting up the special economic zones where manufacturers can actually carry out their activities and have tax havens and the like until they reach a certain point. Also spurring innovation in the manufacturing sector. So all these are things that we can try and spur, but we also know that they still need the credit to fund their businesses and the like, and until also we get credit flowing into business ideas in the manufacturing sector, we don't expect much growth to continue. However, as one of the major linkage with agriculture is there. So as we also do well in the agricultural sector, that linkages in terms of agro-processing should also
automatically. Yeah. All right. Moving on swiftly into the insurance sector now. Insurance companies at the NSE have seen a drop in revenue in the financial year 2018. What does this say about the insurance sector?
Well, for the insurance industry, we found that they actually reported an underwriting loss in the previous year. I think penetration has not actually been rising. If you look at the place insurance penetration is in the country is below 3%. It has persisted below 3% for even the last 5 years. And we expected this to actually improve, but we're not finding that being the case. And we know insurance companies, they have to invest the premiums. We also saw a number of companies being hit by the bear run that we saw in the equities market last year. So in terms of the underwriting profit is not coming. There's also a lot of undercutting and a bit of fraud. So claims might have been a bit overstated. And also now in terms of investments, some also took a loss. So that's why they didn't have a good year last year.
All right. And do you speculate that they'll have a different, is this a stagnating situation, or is it going to be different maybe this year?
We've seen a lot of partnerships, especially the insurance companies and banks are trying to yield fruit in terms of driving bank assurance and the like. So I think that's one of the revenue streams that they can still pursue in terms of trying to increase their revenue.
All right. Well, let's move on to another factor that is going on at the NSE. Listed firms fail the transparency and risk control test. So we start by taking a look at the term transparency, Caleb. In this particular situation, what does it mean?
For a listed firm, especially, disclosures are paramount, and they're everything in terms of transparency. If I'm an investor and I want to look up a certain company, but I can't find their annual reports, or I can't find certain information that is expected to, I can't find that online at their websites or wherever, then that company is not transparent. So companies that are listed, they have a duty also to the investing public to make their websites clear, to be able to publish the annual results on time, release the annual reports, and give detailed disclosures to investors and to stakeholders in general.
At what time frame?
Well, it depends on when you close the year. Basically, I think different industries have different time frames. Like for the banking sector, after 3 months, that should be in March. All banks are required to have released their previous year's results. But based on different companies have different reporting periods. But basically, it should be 3 to 4 months after the close of your year.
All right, because I'm looking at the number. 27 is a large number. If you just add a few more companies, we'd be hitting half of the companies listed at the NSE. So what exactly would be pushing them to failure?
It's now goes to a question of governance, because if you are required to release and disclose, which you are required to release results on time, disclose your results on time, get audited at the appropriate time, then failure to do that is more of a governance issue. I don't want to say possibly that because these companies, all of them have been audited even before they became listed.
Yeah.
I think they still have, in the budget, still have an audit allocation. So I don't really think there's the audit that might be taking as long as some companies might be claiming. So it boils down to governance, proper governance from the board, from the top management, to actually release the results on time.
All right. Now, and maybe you can just quickly explain to us how this may affect the investment at the NSE.
Well, we've long held the notion that